Okay, good afternoon, everyone. My name is Dr. Grace Gedaiga. I lead a team at an institution known as KICTONET. That's Kenya ICT Policy Network. We are a think tank policy and regulation institute that works on public interest regulation. So I'm going to be your moderator today, and I'm going to ask my panelists to introduce themselves like we agreed in 1 minute. Livingstone? Yeah.
I don't know if it's on. So,
It's okay.
hi everyone. My name is Livingstone Odero. I'm the Cloud Business Development Manager at Huawei. I'm handling the financial services business, so the BFSI sector, if you like. Thank you.
I press. Oh, good. Good afternoon, everyone. My name is Kevin Mutiso. I wear two hats. The first hat is I'm an entrepreneur, so I run a business called Oye Platform Solutions, where we're building a border platform where we give them loans, insurance, and more. The other hat I wear is I sit as chairman of the Digital Financial Services Association of Kenya, where we are the advocacy group for digital lenders. I like reminding people, if you remember in 2018, somebody used to harass your nephew, your niece, your auntie. That is the ecosystem we come from, but we are the team that solved that problem because that is no longer an issue in this market. Thank you.
Hello, everyone. My name is Winnie Siowai Onyancha. I work at KCB Bank Group. I'm a corporate relationship manager and transaction banking expert. Yeah, glad to be here.
Good afternoon, everyone. Good afternoon, everyone.
Good afternoon.
My name is Faith Nkatha Gitonga. I work for Tony Blair Institute. I wear two hats, head of tech and interim country director.
Good afternoon, everyone. My name is Edna Atisa, board member at the ICT Authority, and also CEO of a fund that finances government officers to purchase cars.
Okay, Edna, may I please request you to move to this other seat? I think there's a seat next to. Okay.
There's no seat.
Oh, all right.
There's no seat.
From here, I was thinking there's a seat. Okay, yeah, because we need to see you. So thanks a lot for agreeing to share your views with us. As a quick way of starting this conversation, I want to hear from everyone quickly, not more than 2 minutes. What is the biggest fintech shift you are seeing that will shape the next 5 years of financial services in Africa? And I think we can start from that far end coming this way.
Thank you very much. I think the presenter who just left has shown us how fintech is driving the financial services sector. Coming from the government space is how this has transformed not just service delivery in the private sector, but also service delivery by government. And so looking at what is the shift that we are looking at transformation in terms of customer experience. We are looking at transformation in terms of costs associated with access to credit. We are looking at a transformation around credit rating for purposes of not just access to finances, but also unlocking that space in light of the fact that the current listing, for example, focuses more on blacklisting as opposed to rating to facilitate access to credit. So beyond just access to credit is the ability to use the data arising from fintech to improve access actually to credit. And I look at services such as the Hustler Fund, a beautiful idea, leveraging on the existing technology to be able to reach the lower in the pyramid. A good idea might have its challenges, but when you look at what was intended, if it was to be executed in the manner in which it was conceived, then was aimed at ensuring that those lower in the pyramid who are unbanked are not only accessing credit, but also able to achieve literacy in terms of even ability to be able to make decisions arising from this technology. So we are looking at a transformation in how financial services will be delivered across both in the private sector and also in government. We always say that old habits die hard, but with fintech, they will die or have died very fast.
Okay.
Yeah.
Thanks, Faith.
Thank you. When I was reflecting about this panel, I had a discussion with a friend, and we were talking about crypto, and saying that's probably where FinTech 2.0 should go. And the conversation got very interesting, and I'm very curious what Victor Odada thinks, because we said, if you think about the basis of crypto, it's where you're able to have, a digital representation of a currency. And I think M-Pesa is that, if you think about it, we already have our own, local crypto as Kenyans. And I think we need to applaud ourselves for that. So when I think about FinTech 2.0 and where we should be going, I'm thinking it's to think that, yes, we are already there in terms of very many aspects of FinTech 2.0. But what can we do with where we are at? So then we lead from the front for Africa. I think it used to be the previous governor of CBK who used to call Kenya the cradle for Africa where tech is concerned. And if we are that way, I think we need to lead from the front where FinTech 2.0 is concerned. So if I'm to think about what innovations then would make sense, I think my answer is very different now that I'm more in the development space. I think I see things very differently. We always talk about collaboration and partnerships. So I'm thinking, do we know what's happening in the community-based sort of organizations? If I think about my village, where I come from, do we understand how these community-based organizations work and the people there, what they really need when an organization is innovating? Are we only maybe having forums like this and we invite government and private sector? Or are we going to these community-based organizations and pulling them in as we discuss policy, pulling them in as we discuss these innovations? Because if you're to reach that lower, the people in the lower part of the pyramid, it would take that. Then secondly, I think to be
Faith,
able...
I'm going to cut you short because you're 2 minutes are over and you can see
That's fine.
they're
Thank
scaring
you.
us.
But
with
my
this
point
timer.
is passed. Thank you.
Okay, we'll come back to you.
That's fine.
Winnie? in
Okay,
2
for
minutes.
me, because ecosystems is the way to go, I'm seeing a lot of collaborations with different partners, a lot of open AIs, a lot of data sharing among all partners so that we are all able to achieve that. And I'm also seeing a lot of public-private co-creation of products. Right now it's the government that is, okay, not the government really, it's the citizens who are demanding for these services. We want agile services, we want fast services, we want this, which can only be achieved by more innovative products, maybe using the fintechs. So I'm seeing a lot of more co-creation with the government, between public sector and the government leading this, which is very encouraging. Yeah.
Thank you for keeping time, Kevin.
As I was listening to everyone else, I said, what more can I add? Because I agree with everything my previous speakers have said. So let me look at it from the customer perspective. I think the customer is going to have more choice. I think we're already seeing that happening in different domains. So if you're trying to send money or receive money from abroad, you now have several options. If you think about it 5 years ago, you didn't. I think that the products that customers will be using for banking will also be very specific and very tailored to their needs. As you can see, like what I'm working on with Oye, we're only focusing on the boda driver. So everything we do is targeted to that specific customer. So, if it's about pricing of transaction fees, it's going to be designed for the boda driver. If it's about design of loan products. It's going to be about what do they do on a daily basis. Is it fueling? Is it service? Is it tires? What is it? And it'll be designed around that. But then, of course, you can't leave out the banks and Safaricom. So there'll be a unique interaction there as well that will be different. I think the banks, as particularly the larger banks, as they grow and become bigger, will want to play less and less with the C, the B2B. There'll be more the B to B to C business model rather than direct B to C. And so I think that fundamental shift will change how the customer also now starts looking at money and how they deal with their different financial products.
Yeah, thank you. So for me, I'll look at it as the next shift in the fintech space would happen within the embedded finance space, because that's where really a lot of action is happening. And also, Odada has put it up. If you look at the M-Pesa ecosystem and how they partnered with us as Huawei, and the numbers say it all. I know from statistics, they say numbers don't lie, people do. So a TPS of 350 all the way to 6,000 requires really a lot of tech collaborations with the best in the industry, as well as also having stable systems that are up and running. You can imagine, like when he was saying during the festive season, the numbers can go up to 4,000, 6,000. Imagine you're behind that and then you have a system failure. About every second, you are sort of like affecting the experience of 4,000 people. That's how you look at it. Also, there's this natural shift from open banking to open finance and to open data. Because for open banking, and we thank the banks for pioneering it, it was collaboration between banks. But as fintechs came on board and more financial players came on board, there was need for growth of the open finance, where you collaborate on the data that does not just look at the banking details of the customer, but all the other financial touch points that the customer interacts with, whether making a payment through maybe a mobile app or through the bank app. And now we're moving into open data, whereby you might not necessarily be making a payment through the bank, but or you could not be transacting through maybe your account. But this ecosystem allows you maybe to have an e-wallet. No, somebody mentioned crypto, right? So that data, whether you're shopping online, whether you're doing your daily insurance, your monthly insurance renewal or annual insurance renewal, when we bring together that data to what now is like the cream de la cream of open data, and that is what is going to drive like financial inclusion. And as Huawei, how are we driving that? We know that for all these experiences that customers are looking for, it requires a robust tech infrastructure to power it. Without tech, there's this current joke: no data, no AI. But before you say no data, no AI, no tech or no cloud, there will be no data to support that that AI advancement. So in a nutshell, the shift is moving more towards embedded finance. There's that natural leap from open banking to open finance to now open data. And there's also this other element of regulatory growth.
Please hold your thought right there, because we'll come back to you where you can respond to that. This was just an opening. MC, this clock here is kind of misleading us, because I know we are supposed to end by 5:10. So I'm managing the time. My first question goes to Faith. So, Faith, we are just looking at regulatory harmonization and cross-border scalability. And I would like you to respond to tell us what infrastructure and trust mechanisms are needed for cross-border adoption. As somebody who works for Tony Blair and, working across Africa.
Yeah. 2 minutes.
2.5, because you've already, yes. But I'll be monitoring, so I'll cue you, yeah.
Okay, that's fine. Thank you. Maybe a quick story. We were just finding out the other day how in Busia we have merchants and traders who trade, across the border, and sometimes people are coming from Congo, Malawi, and doing quite a bit of trade there. And all this is happening cash. And I don't think it's news. If they're bankers and, guys in the fintech space, they probably know this. And, you know, so even as we talk about excitement on one side with what M-Pesa has done, there's still, you know, a lot of these cross-border, excuse me, you know, transactions that are still happening cash. And the story is that they actually do it in dollars. Maybe that's a common currency that they have. So when I think about, you know, how to create that trust, it's probably thinking about the digital ID. Could we have a Pan-African, you know, digital ID? And these are conversations that we're having as the institute to just see how do we work with the COMESAs, the EACs, to then not only think about a digital ID for me as a Kenyan, but maybe an East African digital ID, maybe a Pan-African digital ID, because then it creates the trust. Then it also opens up the ecosystem. I think even a lot of fintechs, I had the question he asked to Victor, you know, a lot of these things make it easy if you're coming from Ghana, etc. If I want to send money, becomes so much easier with that digital ID. And then the second thing, which is a big passion of mine, is that when it comes to policy, it has to be that policies are, you know, do I call it inclusive? You know, because so many times if you think about the regulator, or, you know, in my fintech days, when you're trying to get that payment service provider license or you're a new fintech, you have to go through so many levels, so many layers, paperwork, etc. So as policymakers or government even, and government is my client, so I have to be careful. You know, is it possible for us to come up with policies, you know, or steps that are not too many, you know, so then it makes it easier for fintechs to then, you know, be able to get started. Think about crypto and the journey that, you know, crypto has had to go through. We are only now beginning to see, you know, a few advancements with the bill that's about to be signed. But even as that bill gets signed, can we work out so that the paperwork is not too rigorous? And then finally, I think I have like half a minute left. I think we have to be able to set up, whether it's the platforms we're setting up, the infrastructure we're setting up, with the idea of scale. I sit in meetings today where you're thinking about whether it's innovations in government or in private sector, and we're just thinking in small bits and in small pillars. How can we make sure that the ecosystem we set up is then able to scale to the regions? You know, the policies we set up is then able to scale to the regions, so that Faith, perhaps who's a fintech, you know, startup or something like that, I'm able to think about how to passport my license to these other regions and be able to, you know, take what I have, like in my days at Cellulant, and work in Ghana and all these other regions easily. I think those three things is what I'd say.
Okay, thanks a lot because you have actually managed your time very well. So, Winnie, we come to you and we want to just hear from you beyond transactions and financial ecosystem expansion. How are fintechs enabling access to credit, insurance, savings, and investment products for the unbanked? And you have 2.5 minutes
All right.
starting now.
Thank you. So when I look at first, fintechs have actually changed the environment in which we play in as banks, as all financial institutions, in that if there's one thing that it's done correct, it's financial inclusion. And in terms of credit, how financial inclusion has worked beautifully for fintechs is because of the different credit scoring methods they've used. They don't use the traditional credit scoring methods that banks use. They use utilities, you know, your M-Pesa messages and etc. to credit score you. So in that way, many people have been able to access credit. In terms of insurance, savings, investment products, and all that, there've also been a lot of collaborations. You know, banks have had to collaborate with fintechs because bank systems are very legacy. We have legacy systems, so sometimes we may not be very agile to innovate as fast as fintechs would. But we need to serve the customers and we need to serve the general public, and that's when now we have to collaborate with fintechs who have like certain niches, like they've collaborated. Like transactions sometimes can be a collaborations of even 3 or 4 partners. There's a fintech behind the scenes, there's an insurance behind the scenes, there's an investment partner behind the scenes, which again is very good because it has changed the way financial systems or financial services are delivered in this country. So when I look at that, then I I am certain that collaboration is the way to go, which is why I'd be very glad to talk to Mr. Oganga, who was bashing banks. Yes, half the business they make, it's part of our collaborations with them. But all I'm saying is we are working very well together with the ecosystems. And for it to come to life is that we must all work together. We must all collaborate. We must all leverage on each other's strengths, because at the end of the day, the end client is the one we need to serve.
Thanks so much, Winnie. I knew you'd respond to the Safaricom speaker. But you know, those of us who started banking a long time ago, you really frustrated us before the fintechs. You know, you had, before opening a bank account, you needed ID, reference letter, a photo, I don't know what, and then you'd go and they would tell you you don't qualify. So that culture of putting money under the mattress was, but now, you know, fintechs in, and I think people will ask that question. The only thing you do is get onto your app, apply, and then can we access all your data? Yes. Kevin, you know about that. So anyway, so we want to move on to the next speaker, and that is from ICT Authority. And we just want to look at, Edna, the issue of public private partnerships, the issue of policy alignment. And you as a board director, can you please just tell us how can governments and industry co-create inclusive financial ecosystems? And you have 3 minutes,
Thank-
2.5, sorry, from
Thank you.
now.
Thank you very much. Fortunately, us in government, we speak very little. And so sorry for that. But yes, public-private partnership. And why public-private partnership? Because it is about inclusion. And the only way to achieve that is to partner, co-create products that look at the people low in terms of income, so that then they participate in this space. Government exists to provide a conducive environment through formulation of policy that then enables the private sector to reach those people that are unbanked, in this case, with specific reference to financial services. And how has this been achieved? Most of the private sector players have leveraged on technology to be able to bring these people on board. And the only way government can participate in this space and co-create is by working together with the private sector to leverage on their networks, leverage on their infrastructure, incentivize the private sector to come up with products that are able to reach these people, because first, they do not have collateral. Then how do we incentivize the private sector? By providing, for example, matching funds, tax initiatives that then would go towards ensuring that this particular sector grows. I look at it usually as a two-way. Initiation of policy is a responsibility of both the private sector working together with the government, because government does not play in that space, but government creates policies that then will enable you to help us reach those people at the bottom of the pyramid. What can government do? Collaborate, create platforms for engagement with the private sector, so that then we can have policies. We create policies many ways. The finance bills that we talk about presents an opportunity for us to be able to push some of these proposals. And it comes through the sector, which is my authority, right all the way to the National Treasury, that then pushes that agenda. So how can we co-create? By providing incentives, by participating in awareness creation efforts, creating programs that enable coaching, that promote ability of the private sector to coach the people low in the pyramid, then to understand the products that are available for them within the financial services sector. So government space is policy framework that supports thriving of this sector to enable them reach or develop products that can be able to reach the unreached or unbanked.
Okay. Thanks, Edna. From the three speakers, we can hear words like collaboration, engagement, co-creation. Really great stuff. Now, the next question cuts across both Kevin and Livingstone. And I don't know who wants to go first, but we are looking at cloud, we are looking at AI and embedded finance. So, how will emerging technologies reshape how we deliver financial services? I don't know whether you want to go first or Kevin, but considering you're both in different sectors but working on the same, please take it.
Yeah, thank you. So I'll take the cloud bit and then Kevin will take the rest. So the topic of cloud is not complete without starting with the basics that form the cloud. So you have your infrastructure layer, you have your platform layer, and you have your software layer. And the three layers are what define the business model of cloud. So at the infrastructure layer is where you have your infrastructure as a service. So you want to access data centers, or right now maybe you want to access your data through maybe the public cloud, or you have your on-prem data centers. So the infrastructure as a service model serves you well. But then you want to build your solution. So your developers need to build your cloud native applications. Throughout the summit, I've been hearing a lot of cloud native, cloud uptake, cloud adoption. That happens at the platform layer. That's where you have your DevOps tools. That's where you have, at Huawei, we say you also have the DevSecOps tools, where we give you the developer as well as your security tools. So cybersecurity is a big issue, and you have to address it even as you build and develop your solutions. Lastly is the software as a service model, which is an end product of your software layer. And that's where we are seeing a lot of uptake, especially for fintechs. And even when you talk about fintech 2.0, and I can see the slides of Safaricom are still open, the collaboration between banks, insurance, fund managers. If you allow me to use them as an example, we are seeing them moving from a monolithic architecture to what you call microservices architecture, whereby you can layer up all these services of banks. He mentioned something about you want to buy your insurance. To me, that is on-demand services on the go. You want to fly, you need an insurance. You don't need it throughout the year. You only need it within maybe an hour, 3 hours, or maybe you have a layover, maybe it's 18 hours. Why should we punish you by asking you to pay for 1 year? It's no value to you. You can access it through one ecosystem that has fully unlocked the benefits of embedded finance. And from Huawei's perspective, what are we doing? They say the results speak for itself. So Safaricom is just one use case of how fintechs are leveraging the Huawei public cloud as well as also Huawei cloud services to really improve on their service delivery. But my main focus will be on the cloud economics. Most of the time when I talk to customers, I'm a business development manager, you'll find there's a mismatch between what they want to achieve and how they need to achieve it. So there's a mismatch because you want to build a solution that will give you $1 billion with a 10,000 shillings budget. There's a mismatch. You have to look at the fundamentals. Building is one thing, deploying is another thing, but delivering value to customers is what really matters because we're moving into an experiential economy. We have the digital economy, but over and above everything, it's an experiential economy. I was looking at the numbers of PesaLink because I believe all banks are leveraged on PesaLink, and they were priding themselves. They serve like 70 banks, and they process about 1.1 trillion. But what stood out for me is the successful transactions, because they were about 98.2%. I have a background in actuarial science, so I investigated those numbers. The gap of 1.8, how much is it? It's about 19.8 billion. So if their systems could be robust enough, or you could be monitoring this real time, you could stop maybe that loss of about 19 point something billion worth of transactions not going through. And that's what we need to also think about as fintechs or players within the financial services space. what value are you losing and what value are you delivering to your customers? Because we go into excos or we go into board meetings and we waste a lot of time talking about the basics. But have we really looked at the cloud economics or the economics of your business? What is your average revenue per user and how does it feed into your cloud economics? So that as you try and tighten your budget, also look at, are you going to spend more in acquiring customers, which will also eat into your profit margins? Or do you incorporate all these things as you plan? So that's really what will deliver value to you. And we are happy as Huawei to continue delivering this value to customers through our financial omnichannel solutions and other also security solutions, as well as tailor-made and customized solutions. Thank you.
All right, Kevin.
The question was around how we see these new technologies impacting fintech. I hope this is allowed, but how many of us are using AI? And how many businesses here are investing in AI infrastructure? Okay, that's a good sign. The reason I asked that question is because I think the world shifted fundamentally when AI came into our lives. And we have a once in a lifetime opportunity to create our own little space within that AI ecosystem. I like giving numbers, so just remember these two numbers. China spent $341 billion, so 3 times Kenya's GDP, buying chips in 2024, and AI chips specifically, right? The other number I want you to remember is that Kenya spends $500 million buying fuel every month. So what's the point? The point is to juxtapose the amount of money that countries like China are spending on AI investment and how far behind we are. And so if we want to take this, I love the words collaboration, I love the words all those nice things. We need to start taking AI very seriously. Now, what can AI do in financial services? AI can do anything you imagine it can do, right? Imagine a product where it knows that as you're waking up in the morning because of your schedule, you're going to go through the expressway, or that you need to call an Uber by this time and it's already paid, or that because you're going to a certain part of Africa, there's a specific type of insurance you need. It can do anything you imagine it to be, but we need to start investing in it now. My closing remark again will be around numbers. Facebook, now known as Meta, has been spending about $10 billion in the last 2 years each on AI, and they're already profitable on their AI products. So just to show you, we need to invest the time, we need to invest the money, and we need to take this AI opportunity very seriously. It's a once in a lifetime opportunity. It'll never happen again. This is it. And this is like social media. If you ask the advertising agencies today in Kenya and in Africa, Google took their cheese in the morning. 30 billion shillings alone in Kenya is what we pay Google as advertisers in this room. And they have captured the small business that has a few followers on Instagram, all the way to the large corporates like the Safaricoms and the KPLCs of this world. And that's going to happen if we don't invest the time and money in AI.
Okay, thank you so much, Kevin. Do we have questions? Anyone else with a question? So there's just one question and we will go on. Can use this one.
Hi, everybody. My name is Franklin, and I lead innovation at Kala. So I have a question, and it's something that I've not heard from the panel. We're not speaking about the gig workers that earn livelihoods that are supported by these fintech platforms. As a continent, we pay 20 billion US dollars for using the SWIFT system. And this payment eats into the margins of these gig workers. So what I'm not hearing how do we reduce this cost of transacting? Because SWIFT is like a telegraph standard for actually processing settlements between different countries. How can we reduce the cost so that the gig workers have more to go home with? Yeah. And the other question is to government. What are you guys thinking about having a central bank digital currency? Because also there's a cost for printing money. Even the paper that the money is printed on is not made in Kenya. Yet we call ourselves a sovereign state. Yeah, there's a cost to it, and I think M-Pesa has a nice opportunity because it has shown us that we can actually process digital transactions. You don't have to walk with paper in your wallet. Yeah. So what are you guys thinking about that, and especially outside Kenya, within our neighbors? Because M-Pesa has done great in the country, but outside it's not widely accepted. Yeah, they've gone to Ethiopia. In Uganda, it's a different system. Can we have like one standard that is accepted by all the central banks within the East Africa region?
Okay, I don't know. I think apart from one that was directed to Edna, I think the other one is general, and I don't know who will take it. So Edna, you have one. The rest, I think Faith, there is one about, one that will be accepted across Africa. Then the rest of you can pick. Yeah, Kevin. Okay. So we start with Edna, Faith, that way.
Thank you very much. I think it was Franklin. That is the name I got. Well, one of the initiatives by governments, at least from the East African community, is to try and have currencies that are common across the regions and many other services that really, so that you don't have to move from one country to another and keep changing, because that alone is a cost. And therefore, jurisdictions perceive certain reform initiatives differently. And arising from that, and as government, noting that they are sovereign states, you can only engage in negotiations. And once you reach consensus, then you can be able to implement. But certainly there have been discussions, as you notice, when we are doing, for example, our finance bill. If you look at the theme, we all carry the same theme. And therefore, consistently, as we move towards oneness, we hope we'll be able to achieve some of this across, because you can adopt as a country the innovation you're talking about, and if the neighboring countries have not, then you are still stuck with your progress. So I think it's something that requires talks across all partner states, moving from East African community to all states across Africa, and indeed the world, if that's achievable. I submit.
I think there was a question about governments using lots of paper to print money.
Yes, government prints money. And currently, we are still at the space of printing money. But then you see government has also appreciated the place of technology in terms of even adopting technology in the delivery of its services in place for exchange for money, which means it's paper money moving across just like the M-Pesa. That's why you have the DAO. You can transact at the comfort without really touching money. And you can do your bills, you can do your bonds, you can do your KRA without giving money. You only, do paperless. And so is the e-citizen platforms. So slowly, I think government is leveraging on this technology to be able to eliminate money eventually. There are some people who are still tied to money, so you can't leave them behind. Of course, we say it, all habits die hard. But in this space, I'm sure they'll die very fast soon.
Thank you. Faith?
Thank you. And thank you, Franklin. You know, in my banking days, I remember we once went for a strategy session and we were discussing how to, no offense to M-Pesa, but to bring down M-Pesa, right? And it's because, we were like, it's a monopoly, so it's difficult to, even cheapen the pricing, etc. And so I think two things. I think it's important for us to be daring, to start with. The startups in the room, so many times you're not finding investors and, it gets you a little nervous, but we need options for payment. And I think with more options, it'll get cheaper and then the gig worker can be able to get access. I spoke about crypto and I had the gig people in mind because, with crypto, and this is opinion according to Faith, I think with crypto, and cryptocurrency, then we make some of these transactions cheaper. So if you get into a checkout platform, you have the option of M-Pesa or Visa or MasterCard and crypto. If, you're working and receiving funds from the States, with some of these, options that you have to use, the Western Unions, etc., a lot of paperwork, it takes so many days. Think about crypto. It doesn't take that long. So I know the government has made very huge strides in this regard. And I know there are bills that are about to be passed even in the coming month. So once regulation begins to open up to these other options of payment, then I think, we'll take care of gig workers and various other things where payments are concerned. My final point is something I learned the other day. I was in an event and they were talking about catalytic capital. And I think I found this concept very interesting. And this is looking for investors who are willing to, for lack of a better word, invest by faith. You invest in a startup and what you're looking at is for impact, and I think FinTech 3.0 will probably be there where it's more impact driven. But I think if we start it now, then you will have this startup that has an amazing idea, a new option of how, payments can be done, and that way we get a philanthropist or an investor investing in it by faith, because it means you won't make money the first 2-3 years because you're going against perhaps a Safaricom that has muscle, but eventually 2-3 years for now, then we can see results. And hopefully we can start talking about sense when it comes to transactions and still immediate, just like we have with M-Pesa, but perhaps another option. Then we sort out the gig workers, but we also sort out the people in the lower pyramid who earn 15,000 shillings, who earn 25,000 shillings, where 100 bob for them is a big deal. So if they have to withdraw what you've paid them, you've eaten into their dispensable income. So I think those sort of things then will transform Kenya and eventually Africa.
Thank you, Franklin, for that question. The answer, I wonder, is it a political issue or is it a solutioning issue? I remember once during COVID, we had the opportunity to present ideas to the government. I don't know if you remember that time. And we at the association actually came up with an idea where why don't we figure out how to get M-Pesa, and specifically the Kenya shilling, as the reserve currency of the region, right? Why? Because we could already see, as my colleague has said, that cross-border trade was already happening with shilling. And one of us had just come from Ethiopia just before COVID. And they had gotten stuck in something, and when all they had was 10,000 shillings, and the Ethiopian received some shilling to get this person, to fix the problem, because they figured how they would spend the shilling. Because the SWIFT platform is a US-led initiative, right? So the problem here is it that fintechs are not designing products that help the gig worker? We are, right? And we're using the infrastructure that's available to us. And that's why the Daraja platform, as Victor was talking about, is something we are very excited about, because it means we can do a lot more, right? He's just talked about Ratiba. I can issue or can make somebody have repeat payments, for example. Does SWIFT allow me to do that? No, it doesn't. Do I even have a voice at the SWIFT level if I wanted to? No. So this is more of a political issue. And I think that the solution to these political issues is taking advantage of these special moments. If you read history and you ask how did the dollar become a reserve currency, it was a very strategic thing. The US sent an economist whose job was to put a specific clause in the deliberations of that economic forum. And at the end, when they were voting and the clause was a universally accepted currency. And then just before they voted for the adoption of that new world order, because that's exactly what it was in 1945, they voted on what that universally accepted currency, and a lot of lobbying had already been done in the room, and they chose the dollar. Right, so very targeted, very specific. While the UK sent the legend Maynard Keynes, who of course is a well-known economist, but was dating a ballerina, so he was distracted by the girl he had carried to the event rather than thinking about the position the UK must take in the new world order. So when I hear our president in China speaking about Kenya being a strategic piece in this new world order that's being formed, and I see the Finnish president saying that as well, I don't know if I should have hope that maybe the Kenya shilling will have a reserve currency. Or I don't know if Safaricom's dominance can be taken to Tanzania and Uganda to our advantage, because we have to start thinking that way. I don't have a better answer for you, but that's what I think. I think this is a political issue rather than a solution fintech issue.
Thanks a lot, Kevin. We have 9 minutes to get out of here. So I will actually ask you now the last question, which should also serve as your closing remarks. So what one innovation or policy change must we see in the next 12 months to truly unlock FinTech 2.0? I think Livingston, you want to start?
Yeah. Thanks. I think that is spot on. Because from a regulatory standpoint, if you look at fintech advancement, I know there's the e-money act or the e-money policy that came in that really supported M-Pesa. We have the National Payment Act, and that is also pegged closely to the National Payment Strategy 2022-2025. 2025 is coming to an end. Majority of what was captured there, I don't see like a lot of progress that has happened. But what I think should be done, or what we should start thinking about FinTech 2.0, is about now the data collaboration of all the players. Because FinTech by itself, of course, it's finance and technology, but how do you really unlock the power of FinTech? It's through like collaboration. And what do I mean by collaboration? If you look at Nigeria, because I've worked there for about 2 years, they had what you call the National Digital Economy and E-Governance Bill 2024. And part of that bill, what it comes up with is it's proposing the setting up of a data exchange. And what does that then mean? You're going to unlock data monetization capabilities. So the fintechs, the banks, the data that you generate, imagine if you could agree to collaborate on that. So somebody mentioned about like AI-driven credit scoring. It means that you'll have more data points that give you a more realistic credit rating of I as a consumer or you as a consumer. Number two also is to look at, the government is always blind sometimes, as long as the money leaves the system. But with these closed and open ecosystems, it means you have full visibility of where they spend. And if I could borrow from the card scheme setup, where you have like different merchant MCCs, the merchant codes. If I'm doing a transaction and it's tied to an airline, the MCC will pick it. So you can imagine if we can collaborate and share that data, it means that as government, you'll have full visibility of spend by sectors, and that calls also for a relook into cloud, because you cannot do this while you're on-prem. You have to join everybody globally, because the world is a global village, and the internet opened up these possibilities. Today, you might be seated here, but you can address people in the US or China. So that collaboration needs to happen. And as players, we need to also think about how we push that agenda of a data exchange, because our colleagues in Nigeria are already doing it. So if really we are the lions of East Africa, we have to rethink that.
Thanks, Kevin.
I think I have two ideas. The first, I don't know if it's a policy idea. I think we should make Lipa na M-Pesa free. I think it should be free all around. Victor, I'm talking to you. The reason I think it should be free is I think, one, you'll be surprised by how many customers will move from using cash. At the informal economy layer, there's an issue with the tariff, right? So and I was telling you earlier with borders, we see them not using Lipa na M-Pesa at petrol stations because it's a mgao tariff. So if I'm putting 150 shillings, I'd rather pay the 150 cash than pay, I don't know if it's 5 bob on top, right? Because that 5 bob means something in the informal economy. So I think you'd be surprised by the volume. I think the banks would be left standing, swimming naked, right? So I think that would be a big shift. I think the second idea I'd have is if we can invest 10 billion shillings in Hustler Fund, I think we can invest 10 billion shillings in an AI something, right? So that we are, as I keep reminding us, we are in a once in a lifetime moment. So if we commit 10 billion shillings over 10 years, DeepSeek told us it cost them $5 million to get where they are. So 10 billion shillings is about 20 times what DeepSeek spent. And I know you all know Kenyans, we're probably the smartest people in the world. So we'll figure out something and we probably will make a lot of money for the economy and for ourselves. So I think those are the two things I'd sort of say we need to do.
Very good. Winnie?
So for me, I'd look at it more from regulatory perspective. I think there should be more regulation in many aspects. First, in the data sharing, there should be some sort of document that not really forces, but ensures that partners are able to share and a framework to protect it. Because even when you want to do something, even with government itself, you'd find that all the data sits in different data points. So there should be a way of data sharing, regulation around data sharing, regulation around AI, because AI is not regulated as it is. As in, we don't have a paper that regulates AI. Regulation around collaboration, as in all these things should just be put in paper. Right now it's hard to achieve so much because it depends. It all depends on how we agree. Regulation around tariffs, as is said, that I think the big brother, the government, should be able to come in and even specify how much tariffs should go, to what extent, Yeah, I think regulation framework for me would be it.
Okay, thanks, Winnie. Every time you've used the word regulation, if I was counting, quite a number of times. And from where I come from, when we hear regulation, we are very afraid because when government hears regulation, it hears control. So I think we need to put a caveat that regulation that must be balanced with our rights,
Yes.
as provided for in the Bill of Rights.
Yeah.
Faith?
Thank you. And I agree with what my colleagues have said. I think it's quite spot on. I think for me, I'll give what the Swahili call a changamoto, right? Every time we sit in panels like this, I always wonder, do we go out and then now create change, right? So for me, I think we need to leave our nice corner offices and our fancy titles and all, and perhaps go on the ground, understand what's happening in Busia. Maybe when you're there, then you will fully understand what exactly is happening. I remember last year I had the opportunity to go to Nepal, and it was interesting. We were visiting a community where an NGO had been there and set up toilets because there were no toilets in that community. And people brought down those toilets, the mabati and everything, and used them, sold them, and got money to buy food. So many times you could be taking a toilet thinking that's what is going to solve, but what people actually need is food. And so I genuinely think, even as the Connected Summit, the government, private sector, us in the development side, we should be thinking about Connected not being in Diani. Maybe the next Connected needs to be in Busia. And maybe we need to be getting these women traders on the border to be sitting on these panels to tell us what exactly it takes, to really just get to FinTech 2.0 that is inclusive, that is at that zero price that Kevin talked about, then I think there would be change. And, if you think about China and Japan, for example,
Faith,
let me finish.
sorry.
This is important.
We only have 1 minute.
I promise you it will take 30 seconds.
Okay.
If you think about when China was overtaken by Japan in the Industrial Revolution, it was because Japan went fast. So in the digital age, it will be the same thing. There are people who will go to Busia, and I'm scared it might not be us Kenyans. It might be other people. And because they'll be fast there, doing a summit there, they will get to FinTech 2.0 before us. So we quickly need to move. Thank you.
Thanks a lot. Edna, close it for us.
Thank you very much. And just in agreement with what has been said by the other panelists, data must be at the center of decision making. It must inform policy so that we have policies that are solid. In doing that, our credit rating, our credit pricing shall be properly informed. As it stands today, even rating of our country is done by systems created by somebody else. We need a homegrown solution. It can only come from us.
Thank you so much. That brings us to the end of this panel session on Beyond Payments, the next frontier of FinTech in Africa. Please join me in applauding the panelists. I think they gave us very good information. And believe it or not, we have finished we still have some 20 seconds to go. So please give us a clap for finishing on time. Thank you so much.
That was actually very amazing, Dr. Githaiga. That was amazingly managed, and it was quality and rich conversation within very limited time. So kudos for that. One more round of applause. We'll take some pictures. Victor, kindly join on stage. Do not be afraid. They will not.